Welcome to the Propertybuyer Podcast, where we explore the world of residential and commercial real estate to help you make better decisions about buying, selling, or investing in all types of property. Join me, Rich Harvey, CEO of propertybuyer.com.au and multi-award-winning buyer's advocate. Our podcast features expert interviews, market trends and insights, and practical tips for navigating the complex world of Australian real estate. Whether you're a home buyer, a seasoned property investor, commercial buyer, developer, or simply curious about the property market, our podcast is for you. Join us as we share our knowledge, strategies, and experience and help you achieve your property goals. Well, welcome to a special edition of the Propertybuyer Podcast, where we'll be talking about the outlook for the Melbourne property market. The Melbourne market has struggled to keep pace with other capital cities around Australia and experienced fairly flatline growth since COVID. With negative media touting high state government debt, higher property taxes and political struggles, we've seen lacklustre market activity. But in the face of property shortages and a rapidly expanding population growth, will we see a turnaround in Melbourne's fortunes? What will be the drivers and the outlook for Melbourne in 2025? Today, I have the pleasure of welcoming Andrew McCann, CEO of Jellis. Andrew is the leader of one of Melbourne's top real estate networks. He brings over 2 decades of experience in the property industry and a really deep understanding of Melbourne's residential market. Andrew has navigated numerous property cycles, making him very well positioned to provide great insights into where Melbourne's property market is heading. Andrew, welcome to the podcast.
Thanks very much, Rich. It's great to be here and thanks for having me.
Pleasure. So we're going to talk about all things Melbourne at the moment, but Andrew, we have a little tradition with the Property Buyer Podcast where I'm going to throw you in the deep end with a thought of the week and a quote from a well-known person called Leonardo da Vinci. And he once said, "I've been impressed with the urgency of doing. Knowing is not enough. We must apply. Being willing is not enough. We must do." What do you take from that quote?
Yeah, I really like that quote. I think the reality of taking action and doing is incredibly important, and it probably speaks to a lot of what we coach and teach and consider here in the way that we talk to our leadership team at Jellis. And that is that the reality of knowing and doing are often two different things. But I really like that quote.
I often think of that book by Jim Rohn, I think A Good to Great, and he talks about you can have all the best ideas in the world, but unless you can execute, unless you can do, it's not enough. Or that famous little green creature in Star Wars, Yoda, there is no try,
We could wax lyrical on quotes all afternoon. There's a great saying from a Sydney real estate coach, Michael Sheargold, that the power of an idea is in its implementation. That's
exactly
one that I've often hung on to, and I think they all speak to the same thing.
So, love it. So, but tell me about your background, if we may. Just want to jump into that. How did you get into real estate, and what was your first job in the game?
Yeah, so I'm in my 27th year of real estate. So I started actually as a 19-year-old. My father was a property valuer and had a small real estate agency probably when I was growing up, and then moved into just more consultancy and valuation work himself. So I had some family exposure to it.
Great.
When I left school, I thought I'd make a great lawyer. I didn't quite get the marks for that, and then I realised there was a lot of reading involved with being a lawyer. So I found my way into real estate in a sales assisting role with a business called Benison McCann, and that business I ended up becoming an owner and principal of, and we merged that business with Jellis 12 years ago. So Fantastic. I've really had one job since I was 19 and worked for the same company that whole time.
That's amazing. So you've obviously seen a lot of transitions and movements. And I guess how many areas or suburbs and offices does the Jellis brand cover at the moment?
Yeah, so we are a franchisor business. So my role as the CEO is to look after our offices and the group. We're a bit over 1,000 people operating across. We call it the Victorian marketplace, but we're predominantly a Melbourne-based business with some selected regional, coastal and lifestyle locations. So we have 41 offices in Victoria. We cover the majority of Melbourne now as we see it. If you go 10 kilometres from the city and do a ring in the eastern suburbs, we're in a middle to premium end agency is the way that we would describe ourselves, and I think a marketplace would see us. And and we sell just over 8,000 properties a year.
Fantastic. Wonderful. It's awesome coverage. I mean, every time I'm in Melbourne, I certainly see your brands everywhere. It's fantastic. So, yeah. Andrew, if we just want to turn our attention to 2024, if we look back over the last 12 months, and how would you describe the current state of the property market right now and in 24? How was it?
I think it's been quite balanced, Rich. I think I think this year specifically, you could actually choose to write an argument for the fact that it's been a better year in property, but you could also write that it's been a pretty tough and challenging year. So that to me suggests that there's different pockets and different segments that are performing in different ways. But if we look at it from the Jellis Craig Group's perspective, we've seen an increase in the transaction numbers. So there's been more property sold this year, and that's good for our business. But if you look at the market behaviours, I think it's been balanced because the clearance rate and the success rate has been strong. And I say strong in that most of the weeks that we offer more than 100 auctions in the Victoria marketplace, we have a clearance rate between 70 and 80%. And I think if 7 to 8 out of 10 auctions sell, that's a strong market. So there's still plenty of demand and plenty of activity. We have seen the average days on markets in the regional and coastal markets that we operate in creep out, and there's less demand in what you'd call secondary home ownership markets. So Mornington Peninsula, Bellarine Peninsula, parts of Geelong, which has been a Melbourne investor hotspot, and regional centres like Ballarat, which saw really strong growth after COVID. And we've seen a lot of investor sell-off, so that's certainly brought a level of transaction to the market that maybe isn't of the same value and sales price that we're used to, but our businesses have been busy. If you surveyed the agents that work for our group, they would tell you that it's been a bit of a grindy year. There's probably been a little bit more pressure on each transaction and bringing price together from the buyer and the seller to meet the market. And again, I as an eternal optimist, I would say that's a pretty normal marketplace. But we haven't experienced, certainly, sorry to talk over, we haven't experienced the same level of property gain or enthusiasm that other capital cities have around the country.
Excellent. No, that's a great summary. One thing I'll just pick up on, if I may, just you mentioned about investors selling. Do you think there's been a investor exodus at all in this? Like, 'cause the media likes to make it out that there's, because of the land tax increase, there's been an exodus. Has there been a really significant jump in investors or just a bit more volume?
No, there's been a significant jump in our opinion, without being dramatic. I do think the Victorian government have really misread the circumstances around the additional property taxes and the implications that it has on driving property investment in Victoria. The realities of the additional land tax is probably not the main driving reason. It's one of a number, and that is that we've got increased cost of borrowing. Interest rates haven't shown any signs of relief, albeit they've stopped going up. They've continued to go up. Investors have also got in Victoria more legislative challenges to navigate around property compliance and condition than other states do. And then I think coupled with the compliance aspects and the costs of that with the additional tax, I think that it's really curbed the appetite and enthusiasm for people to enter the market. And for those that have decided to look at their investment and say, well, I can't continue to just justify the negative gearing benefit, I'm choosing to sell out and just put money in the bank. And that's what we've seen this year. We've seen more than double the amount of property sell off our rent roll than we did the previous year.
It's a very rational response to an irrational policy, in my view. But Andrew, as we sort of look forward into 2025 and getting out your crystal ball and your sort of interest in the market, what are the key factors that are going to influence the Melbourne market throughout next year?
We expect that there will be more of the same in terms of the conditions for the first 6 months. We're coming into Christmas with strong performance across the group, and that suggests that there's a depth of interest in the buyer pool. I'm a believer that Australians are a fairly resilient bunch, and they don't like to be told what to do and when to do it. And people want to get on with their life of buying bigger, smaller, or different. So the downsizers don't want to sit and wait for price recovery. They want to find the apartment or the coastal property to move to. The upsizers need space. And I think that with the expectation of interest rate relief, people are more confident about their decision making for next year than they maybe were this time a year ago. So we expect the market to be consistent. We don't expect to see huge capital gains, but I think we will bump along the bottom of the price sector and then see things lift in the second half of the year. I think we've seen probably as much of the investor sell-off. If we look at the trend in our business, that started to slow down. So those that have chosen to hang in there, I think, have hung in there and will continue to hang in there. So I think that we'll start to see things start to just gradually lift across the Victorian landscape. And the most salient point for us is that we also think as a marketplace, and you've got a greater lens on this across the country, but Melbourne is starting to look incredibly affordable given the price gains of Brisbane and Adelaide. And I think we have a lot more to offer here around longevity of the business sectors and the size and scale of our state with population gain.
Yeah, well, I guess there's 2 points I'll make on that. One is that, Melbourne's at a 60% discount to Sydney. Sydney's median price is approximately 1.65 and Melbourne just over $1 million. So there's definitely the value proposition in Melbourne. And I think secondly, you've really summed it up quite well. I think there's going to be a real confluence of factors, but in terms of the interest rate cut timing, I'm of the view that consumer confidence has gradually been increasing. It's now sitting at around 93 points, and it was down around 82 points about 6 months ago on the expectations of rates cut coming. Once they actually hit, it will definitely engender more confidence. Once we get a second rate cut, the market will reignite once again. And I think you'll see a lot more buyers coming back into the fray, more affordability in the market, and a much more active buyer pool than people sitting on the fence waiting to see what's going to happen.
Yeah, and I totally agree with that, Rich. And again, I mean, you act in that marketplace. We confront buyers on a daily basis. But I think that there's also just the logic of looking at the alternative, and that is that rents have continued to increase and there's a housing shortage. So whilst you look at the dichotomy of do I own or do I rent, property ownership in Australia is still the best vehicle that you can have in terms of forced savings and long-term capital gain.
That's it, yeah. I want to talk about Melbourne's population growth. I mean, Melbourne has now overtaken Sydney in terms of being the largest city in Australia, based on some statistical boundary changes. But we've seen since the pandemic finished, it's really strong. So how's that going to shape housing demand in Melbourne, do you think?
Yeah, well, it's interesting. I think we are struggling to keep up. Again, another kick for the government. It looks like we're just battling, given that we've got cost pressures in the construction areas, not enough relief and not enough stimulation for the builders to, stay solvent and keep moving, and get some of those developments built. And some of the planning regulation, I think, really needs to be looked at to start to serve and support the population growth that we are naturally having. But Melbourne's been going through its spread. With that, you tend to see, and the data supports this, most of the migration moves into the rental pool to start with. It tends to find a community where it has, other migrants have safely settled, and then the buying process starts. And then that tends to be, for what we see, it tends to be newer development, city fringe, and then some of the stronger inner city suburbs for the wealthy migrants. But what it does across the whole board is it just takes the level up. So any time that you're increasing the pool of activity, it forces the activity to deal with its growth. I think regional areas like Geelong and Ballarat and Bendigo become areas of focus for us in the way that we're looking at how that migration might affect. It might not just be for inner city Melbourne and the fringes of, but it might be those larger regional sectors that have some influence and impact there.
Okay. Apart from Geelong and Ballarat, are there any other suburbs or locations, general locations within Melbourne, or if you want to mention specific suburbs that you think are going to perform really well in 2025? In other words, if I'm an investor listening to this podcast and I've got the CEO of Jellis Craig on the line, give me a hot tip. Where should I buy? Where do you think it's going to be a good area to go? We won't hold you to it. We won't hold you to it, by the way. So.
Yeah. Well, you're welcome to, because over the long run, I will win. Anywhere you invest in the Melbourne and the Victoria marketplace, you will win in the long run.
Yeah.
Look, I believe that areas, we might get to it later, but a number of our infrastructure projects are around transport and train upgrades and locations. I think that as the traffic continues to be challenging, as you try and come into the city from any different direction, and the cost of travel in your own car now. I spoke to a fellow who works for REA and has moved into a regional area of Victoria. He's driving to work on one of our tolled roads, and it was costing him $300 a week in tolls to come to the office, whereas he could naturally take the train, which will be a decision he'll make next year.
Yeah.
So I think as that becomes something that we look at as a cost of living pressure, I think being in the areas where transport's being developed and improving will be areas that will see price growth and gains. I'm a big believer that, albeit the weather in Melbourne is not quite what it is in Sydney, it's a beautiful day here today. I think that the Bayside suburbs from Mentone down to Frankston have got a lot of growth. I think young families will see that area of access to the beach, access to the train line, which brings them into the city on the Frankston line. Frankston itself is a marketplace that I would certainly be investing my own money in. It's the end of the train line, and it's an incredible beachside location, which has probably been tarnished by being viewed as a bit of a substandard marketplace. I think they're the areas that I see being gentrified and changing as families get forced to make decisions further away than where they've grown up. And the established housing around there, in my mind, is incredibly affordable. So that's where I'd be parking my investment money. If I was looking to stay very close to the city, I think that the older style apartments around traditional suburbs like Toorak, South Yarra, Paran and Armidale are still incredibly good value. It's hard to find a house in those areas for $1.5 to $2 million, but you can buy a nice older style 2-bedroom apartment for $750,000 to $850,000. And they haven't seen much price growth in the last 5 to 10 years. So the gap between apartment and house in those areas and the lifestyle benefits that they have, I think that's an area of the marketplace to watch as well.
You've nailed 2 exact strategies that we're using for our investors. So we haven't prepped this podcast in any way, by the way, but you have nailed exactly what we're doing for our investors. So firstly, the Bayside areas, we are putting a lot of our family-friendly investors into that area because we think the land content is going to drive value. And as you say, it's a great lifestyle amenity. And secondly, that dichotomy or the disparity between a house price and a unit price in those premium suburbs where you can buy, you're buying an apartment for less than replacement cost in some cases. It's just, it's just such an opportunity I think investors should have. And I think maybe the third point I'd make is you talk about which areas are going to perform, and it always comes back to areas that have the best amenity. So transport connection, great shops, great schools, great community. It's always like people were thinking, if I move out of the city during COVID just to get away from it all, but then there's this regional regret that people have, and they go, it's too far, it's costing me too much in tolls, I'm travelling too much. So we often find that the market then reverts back to the mean and comes back to the areas with most amenity.
Yeah, and we've seen that post-COVID. The tree changer lasted a year, and they were back looking to find a tenancy or a place to live in Richmond to get back to being close to the city because they were called back to work and they missed their local cafe and they didn't want to get in the car every day. So there is that reality of convenience that I think that we often underplay.
Yeah, exactly. So for buyers looking to get into the market in 2025, we've just mentioned units there, but are there any other types of properties that you think represent really good value for money if you're an investor or a home buyer wanting to get value?
Yeah, I think, certainly I look at the areas where there is challenge and is there a work around that challenge? So the older style apartments I like because I think they've been incredibly well constructed. And I think that if you look at what's being built in the new apartment space, it's very expensive to build. Those developments aren't stacking up. And because of that, they have to really query what they can deal with on materials. So I would encourage people to avoid the newer apartment and look more towards the traditional. And then I think because of that pressure that is genuinely real around construction costs and renovation costs, a house that can have some value added to it that's on a good piece of land but is in good livable condition with a 1980s, 90s renovation might not be up to photography for an interior design magazine but is comfortable and livable. That's the sort of area that I think people will have good upside with because there are many, many buyers that are really flocking towards the fully renovated. I can move in, don't have to spend $1. And I think they're selling at a premium. I think anything that needs a little bit of work but not too much is undervalued. And that's where I see the opportunity in the current market.
No, fantastic. I totally agree with you about avoiding new. We always say to clients, you get far better value buying an established property. Otherwise, with new, you're paying a developer's premium. It's like buying a new car, and as soon as you drive it out of the showroom, you lose 10 to 20% of the value. So buying established properties by the same token, you're getting much better value, and you can add value, as you say, through the renovations. Yeah. We really appreciate you tuning in to the Property Buyer Podcast, and I hope that you're finding our expert interviews helpful. So that we can keep providing this information and growing our audience, we rely on word-of-mouth recommendations. If you found this information useful, could I please ask you to share this podcast with your friends, family and colleagues, and ask them to subscribe to the Property Buyer Podcast. It would be a big help, and we'd be very grateful for your support. Thanks once again for sharing the links. And now, let's get back to the podcast. Andrew, I just want to ask you if there's any significant infrastructure projects that you know about that are planned for Melbourne, and what impact that might have on the property market in those locations.
Yeah, well, the Victoria government says that we're in the build big phase of the infrastructure project plan at the moment, but nothing's being finished. So I think that the main parts that I'd touch on is the rail links. We've got the underground link happening around the city at the moment. I do believe that there will be a push back towards public transport, just with cost of fuel, cost of driving, the re-rationalisation of people returning to work in the cities. So I think the areas that are on the fringe of the hot suburbs, and I suppose an example of that was the one that I use in the Bayside. If you call the premium Bayside suburbs, go down to Mentone, and then all of a sudden you start to buy better value in Chelsea, but you're not living a significantly different lifestyle. I think it's those suburbs that are on the fringe of that would see the benefit, and it's the ones that are benefiting from at the moment. They're going through. Governments have been, again, you know this, Rich, because you've been focusing on the Bayside, but every single surf club between Brighton and Parkdale has recently been renovated and refurbished.
Yeah.
Every part of that train line on the Frankston and Sandringham train line is being renovated, refurbished and upgraded for speed and noise. So the houses that are backing onto the train lines aren't dealing with the same issues around noise of living close to, and the lines themselves are working more efficiently.
Yeah,
so it's those areas that I'd be focusing on most and foremost. The Westgate Tunnel project is about a year and a half delayed, I think, by all accounts, and it's very challenging to get across the Westgate. People avoid it like the plague, but I think going west, areas like Footscray and Yarraville, when that project is complete, will become very attractive, and more so attractive than they are now. I mean, the west of Melbourne is really untapped from a property price growth perspective, and I think that's the natural evolution of where a lot of the next wave of our property growth will come.
Fantastic. No, really good tips there. Thank you. I want to ask you about the rental crisis, which you mentioned earlier, or the rental difficulty. But do you think the shortage of supply in rentals will ease in 2025, or is it going to be a continually ongoing challenge for renters and landlords?
I think for landlords it won't be the challenge of finding a tenant, because I think that the tenancy pool is fairly consistent and will continue to be, with the net migration numbers going up. So I think that the tenancy space will be competitive, and that's a comment that I made today just in summing up the year for Jellis Craig. Was a big thank you to our property managers, because they have had less properties available to lease, but it's been harder for them to do the work because they've often had 5 to 7 applications on each property.
Wow.
So you're dealing with people that are finding it hard to find housing. Emotions are high. People get frustrated. There's natural rent bidding that can happen in those circumstances, which is not really promoted or published from our point of view, and people, it's not well understood in the marketplace. So it's been a challenging sector just from a management point of view. But I can't see that will change a lot next year, to be honest with you. I think because most of the investors that have made that decision to exit have exited, they haven't been replaced, and the government aren't stimulating investment. And the things that need to come out of the ground, build to rent is a very small segment of the market. It's not going to be the answer to the demand factors. So I think it'll be a pretty sticky market. I think it'll continue to see a little bit of price growth and competition. And I don't think we're going to catch up in terms of the required delivery of dwellings to satisfy the rental crisis next year.
So good news if you're a landlord, tough news if you're a renter. I mean, I've got a couple of properties all around the country. I've got one in North Carlton, and it's just coming up for lease, and I'll be able to put up the rent just on the basis of what my property manager's recommending by about $100. So it's great news for, helping to cope with the extra land tax I've got to pay, but certainly good for cash flow. I just want to ask you generally, also, is there any other challenges that you think home buyers or investors might face in 2025, and how might they overcome those kind of challenges as they head into the next year?
I think that for home buyers, whilst I think I touched on this in my earlier comments, we're up on our sales volume numbers for the year. So we say there's more houses that have sold, so that's good for the market. But I think the nitty-gritty of it would show you that with a bit more investor stock having sold, it's not the type of dwelling that the marketplace is necessarily looking for. And I think, on a bigger picture part, there's been less quality available in the market that's been for sale. Mm-hmm. And I think that will continue. So I do believe that buyers are they're not going to be spoilt for choice. The best houses will still be hard to find. I think that people are in that situation at the moment where, because you're not seeing the velocity of price growth, people are questioning their decisions to sell. They're more cautious. There's more stress involved in the sales transaction than ever before. Advertising expenses have gone up dramatically with online prices increasing year on year through realestate.com and Domain. It's not easy to get your house prepared because it's hard to get a tradesperson. It's just not an easy process to prepare for. And I think more people are sitting on the fence for that decision. So therefore that quells the market's enthusiasm. When you're not seeing your neighbour sell for $200,000 or $300,000 above their reserve price, you naturally just sit a bit tighter and a bit more conservative. So I think the challenge for the buyers will be availability of good stock. I think that the challenge for sellers is probably unlocking the reality of where price is now starting to settle. I think a lot of people have found it very hard to rationalise that the prices that we saw in the Melbourne marketplace post-COVID were extraordinary, and those levels of extraordinary gain in some markets as much as 50% in a very short period of time are not sustainable, but also they might not be recoverable for a period of time. And with the cost of borrowing, people's wings have been clipped, and it's harder to get access to those funds. So the market needs more balance on both sides.
Got it. Andrew, I just want to ask you a little bit about how you think technology is shaping the way real estate agents operate and connect with buyers. Is there any particular kind of prop tech or AI that you're using in your business to connect with buyers?
There's not yet really, Rich. I mean, we've got AI embedded in some of our internal systems. So we have an e-communications platform where if a buyer's registered and wants to receive an update from us on new listings and properties that are available, we'd send them a weekly email. And what sits in behind that is some tracking information that can let the agents that are attached to that contact know who's more active and who's looking, and therefore we provide a little bit more service to those people that are becoming warm. As far as the search, I made the comment to one of the members of the executive from Domain only last week that I'm really interested to see how long it is before we see the AI generative search patterns change on these portals. I think it's quite archaic that you still have to put in a suburb and a price range and a bedroom count, and you end up with a long list of things that don't suit. I think that there's a way for they're clearly, they're probably battling with that themselves.
Well, watch this space.
Economic model point of view.
Yeah, watch this space. We're working with a couple of IT providers at the moment who are tracking how we work with buyers and actually doing that and coming up with a couple of models. So watch this space. Yeah.
Yeah. So I think that's an industry level, but we haven't quite solved the AI question around how does it help for a buyer to find a property and for us to service them better. At the moment, it is still the traditional of the man-on-man communication. What are you looking for, and what have we got that's coming up that will suit you based on the trends and the patterns of your behaviour. And the closer that we can be to those buyers and buyers advocates, knowing where they're looking and who they're looking with, our agents are still very effective at connecting the dots physically rather than relying on technology.
Well, to that very point, that's why we have the word agent, and you just mentioned buyers advocates. I'm curious to know also just what's been your team's experience in dealing with buyers advocates, and I guess how does that interaction differ perhaps from an ordinary buyer?
Yeah, I think, well, first and foremost, up until I've been in this recent role, I've been an estate agent for 26 years. And I've always had and felt it to be really important to have great relationships with buyers advocates, because they're part of the property ecosystem, and buyer advocates represent people that want to buy property. So if my role is to sell property, then I should be dealing with as many advocates that want to buy property as possible. We see the only difference in the way that we would treat an advocate, truthfully, would be more on the fact that we understand that they've been through the process multiple times. So sometimes you can get to the point a little bit faster around how the transaction might need to be managed and handled. But we would say that we have great relationships with advocates across our whole footprint and see them as an important part of the marketplace.
Yeah, that's great. I want to ask you a little bit about foreign buyers. Do you think that foreign buyers play a significant role at all in the Melbourne market? And do you expect any changes next year in terms of the volume of foreign buyers coming into Melbourne?
I don't think that we expect any changes. We've seen at the very top end of the Melbourne marketplace, there is genuinely a number of the transactions that have happened at 20 million plus in Melbourne have been to foreign and offshore buyers. And we think that whilst Australia is one of the most attractive places in the world to live and to own property, that will continue to be the case whilst we've got the door open for migration and that opportunity. There are a number of different segments of the markets that we operate in that have strong, whether it's Chinese, Indian, or Muslim communities that tend to buy into specific pockets of our marketplaces, and we don't see that changing. And I think with that, it has an influence on the price and the competition in those markets, and I think there'll be more of that next year.
Fantastic. I'd like to ask you to get out your crystal ball one last time, Andrew, and I guess over the next 20 years, if we're looking ahead, next 2 decades, right? I know it's a long time to think about, but how do you compare the prospects for Melbourne compared to other key capital cities? Like, we've talked a bit about the price disparity, but what's your view over the next 20 years? How does Melbourne compare?
Well, I think Melbourne, if we put the economic issue of our government to the side, Melbourne is still one of the most livable cities in the world.
Sure.
And with its infrastructure and with its economic base and its commercial base, and the fact that we do have very good infrastructure and we do have a lot of opportunity when it comes to employment, I think Melbourne will be a great place to invest for the long term. I think we're in a cycle. You talked about that at the start of the conversation around what my experiences have been. And one of the things that I talk to people about when it is more broadly about the property market is that we get very stuck in the now cycle of what we're experiencing now. And we forget about what's happened over a period of time and what's going to happen in 2 or 3 years. And the reality of the now cycle is that it is the worst of the interest rate cycle that we've had for a long period of time. And there will be relief, and it will come back to a point of balance, and we will get on top of inflation. And then consumer confidence returns, and then people start to chase a bit harder, and they build back in their own ambition and their own enthusiasm, because that's the type of people that we are in Australia. So I think that Melbourne has a great outlook for that from a prosperity perspective. I do think areas like Brisbane are obviously taking advantage of the Olympics, and they've had that little run on from an investment point of view post-COVID, and at a lifestyle level, you can see the Gold Coast is having that absolute boom, but those places don't have the same scale of city that we are here in Melbourne and Victoria. And I think that you come back to that fundamental of what we will be as a population. This will be an incredibly safe place to invest your money in property.
No, really good answer. So, I mean, you're absolutely right. The livability of Melbourne, the train network, the motorways and the coffee and the culture, it's just great. And you got the tennis, you got the Grand Formula, you got the Grand Prix, you got a lot going for it. So I guess that's my next question for you. I've got 2 more questions for you, Andrew, but what would be one key takeaway that you'd like our audience to remember about the property market as they think about the year ahead?
I think, that's a good question. Mine is to think longer than a year ahead. So I always come back, your first point today around the quote and the reality of action is that people that sit and wait and watch tend not to get ahead. It's those that have the bravery to act that create progress. And I would look at now as a great time to be a buyer, because if you can afford, you are buying at the bottom of the market. The market's it's shrunk from a price growth point of view. It doesn't have the same competition as it has in crazy cycles. And again, what I suppose I always look at it at a behavioural point of view, Rich. We came out of COVID, and for 30 days, I did an auction online or in present when we came out of the lockdowns in Melbourne. And we had record month for 2 months in a row in the Melbourne marketplace. And people were literally registering to bid in their droves. And they were buying property on fear of missing out. And then for the buyers that missed out, they had a chance to buy 6 months after that crazy cycle. They're the ones that started second guessing themselves because they couldn't see all the competition around them and they weren't sure whether it was the time to buy. Whereas my argument was, well, why would you want to buy when there's competition if you can avoid it? So I think that long answer is take advantage of the opportunity of now, and then think for the longer term around the fact that Australia is an incredible place to live. We have a very strong, we do have a strong government system. We're a strong country when it comes to policy process and livability, and for all those reasons, our point in time will only get better, and therefore prices will continue to grow. So
fantastic.
That's what I think.
Really,
opportunity.
Really love that answer. I totally agree with that. Endorse that. And last question for you: what would be your best property tip that you could share with your audience that either you've implemented or you've heard and been given to you?
Well, the cliched one is location. I think that the one area that I think people get confused and concerned by when they buy properties is what they are competing with and then what they will compromise for. And I think that there is a good property and a bad property, and the avoidance of buying bad comes down to either getting good advice or doing research. And I think that if you get the fundamentals of understanding what good property looks like and you're patient and you're prepared to pay appropriately for it, you get rewarded. And I think it's the ability to compromise because you missed something or you're knee-jerk or you're not well considered or well advised. That's where the risks are. So to avoid those risks, I think it's find the formula of what's good and pursue it with enthusiasm.
Fantastic. Oh, Andrew, you've been an absolute pleasure to talk to you. Thank you so much for sharing your sage advice and just such a practical outlook. I can see how your more than 2 decades has really shaped your view, and just want to say thank you so much for that.
That's been a pleasure, Rich. It's a great conversation. I really enjoyed talking to you and to anyone about property. So thanks for listening, for whoever's made it to the end. And I really appreciate the opportunity and hope that you have a great holiday season coming up. Thank
you so much. So I've been chatting to Andrew McCann, CEO of Jellis Craig, and that's it for another edition of the Propertybuyer Podcast. Thank you so much for joining us. Thanks for being with us on another Propertybuyer Podcast. If you have a question you'd like to ask, please click on the SpeakPipe link and we'll answer this during the next episode. If you're looking to buy a residential or commercial property in the near future and would like to get the added advantage of having a buyer's advocate on your side, then please reach out to my team today and send us your inquiry, and we'd be delighted to help. Please visit our website at propertybuyer.com.au, where you can stay updated with all my latest market updates, weekly blogs and live suburb profiles to help you make better property decisions. We look forward to connecting with you again on the next Property Buyer Podcast.